Kopkrap, for those who don't understand Afrikaans, it means scratching your head. Now, hopefully we don't have any lice or any disgusting things going around. This is just, I'm scratching my head because I don't know what's happening. So, and at the end of the day, it's actually a very easy question. So there's not a lot of scratching of head going along. Assume a VAT rate of 14%. You are the financial manager of Kopkrap, a registered VAT vendor. The recently appointed accountant has requested you to assist him in the preparation of financial statements for the year ended 31 December 2015. He experiences problems with the calculation and disclosure of cost of sales and inventory. He receives the following information, important, exclusive of VAT, pertaining to the year ended 31 December 2015, which has been compiled by the accountant. Opening inventory and closing inventory. Raw material, work in progress, finished goods, and packaging materials. Then I give you additional information for the year ended 31 December 2015. And then at the end of the day, they gave you other expenses for the year were, and very important, VAT included where applicable. So guys, whenever you see that, just take out the VAT so that you don't accidentally forget to do so and then maybe make a mistake somewhere along the line. So they say everything includes VAT. So sales is not 1364, it is actually 1197. Raw material purchases is not 129390, exclusive of VAT 113,500. So by the way, remember the VAT rate that we have to use is 14%. So I divide it all by 1.14. Right, admin expenses, that if I take out the VAT, that is equal to 92,000 Rand, not that you're going to use that whatsoever. Then direct labour cost, there's no VAT involved in direct labour cost or indirect labour cost or any labour cost for that matter. Overheads, they all tell me it is taxable supplies. Now that means if it's taxable supplies, everything is subject to VAT. So the VAT exclusive amount then, 190,000. Selling expenses, packaging material, well, it's not as if you're going to use that, but let's do that just for completeness sake. So VAT exclusive, 98,000 Rand. Then, if we want to scroll down here, transport costs, raw material, if we're going to take out the VAT of 14% there, it gives me a VAT exclusive amount of 75,000 Rand. Now let's have a look what is required from us. Journalize the transactions in note 4 that the accountant has forgotten all about. Calculate the cost of sales figures as it will be presented in the statement of profit or loss. So that is the final figure, guys. Remember, the user of the financial statements is not interested in your unrealized profit policies. He wants to see actual profits, actual costs, actual value of inventory. And then prepare the relevant presentation and disclosures with regards to inventory in the statement of financial position in accordance with IAS 2 as of 31 December 2015. Great. So let's start here. Note number 4. Kopkrap adopted a perpetual inventory system. That is quite important if you want to do journal entries, because if it's perpetual and you talk about purchases, you will not get any marks. And they apply the first in, first out method of inventory valuation. Finished goods are transferred from the production line to the sales store at cost plus 10%. So your unrealized profit margin is 10% on the cost of the manufacturing cost of the goods. Opening and closing inventory figures provided by the accountant include the profit percentage. So that 55,000 includes 10% profit, that 66,000 includes 10% profit. So that means that will be the opening balance and the closing balance of my finished goods account. But I can calculate now the opening balance and the closing balance for my allowance for unrealized profit. Opening balance would have been 55,000 times 10 divided by 110, which gives me 5,000 Rand. And closing balance would have been 66,000 multiplied by 10 divided by 110 equals 6,000. Then there was some raw material which was actually destroyed in a fire. So we're going to do that one in a little while. And now number 4, that is the first part that I want from you to journalize the transactions that took place in number 4. Now remember, if there are certain transactions that took place at certain dates, you cannot do only one journal entry because it didn't happen that way. You have to do all the entries as it went along on a day or per date that the event happened. So on the 14th of December, a payment was made for 27,707 to Plot for indirect materials used in the production process. So where does indirect materials use go to in this whole story of manufacturing accounts? That will go to work in process. The transaction was concluded on 30 November 2015. So this was the first transaction when we actually bought some indirect materials from Plot. And we received a trade discount of 10%. The credit terms of Plot is that we will receive 2% settlement discount if we pay within 15 days, and Kopkrap always makes use of the settlement discount. On 5 December 2015, now when did we buy the stuff? On the 30th of November. When did we return some of this stuff to the supplier? On the 5th of December. When did we pay the creditor? We paid him on the 14th of December. So before we paid him, we returned certain of this material to him. And they give us a credit note amount. They said the total credit note amount was 5928. Now that is the source document, and the source document will always include that. No indirect material was on hand as at 31 December 2015, and as a result of that, the accountant has forgotten to record the purchases, the returns, and the payment transactions. So the first part of the question wants you to record that. Now, if we look at the amount paid, let's have a look there. How much did we pay? 27,707. What does that represent? That represents 98% of the amount that we actually owe the creditor. That gives us 28,272. Now, obviously, because we have returned some stuff to the creditor, the original invoice was more than the 28,272. That would have been equal to the 28,272 plus the value of the credit note that we've received for the goods returned. So the original invoice was for an amount of 34,200. Now that's easy. Once you derive there, and this is first semester work, we take the 34,200, we take out the VAT, and we say the VAT exclusive amount is 30,000 Rand. Then we're going to take that, 30,000 Rand, and we are going to split it into the two legs. So the first leg is going to be 98%, and the 98% is going to go to my indirect material, which equals 29,400. 2% would have been posted to our allowance for settlement discounts on creditors, which equals 600 Rand. So once we have that, we can record the first transaction. The second transaction is straightforward because they give us the value of the credit note. You must just pass all the credit note transactions. Let's just have a look at it. 5928 divided by 1.14 to get to the VAT exclusive amount. The VAT exclusive amount, 5928 divided by 1.14, equals 5,200 Rand. And that again you have to split into 98% and 2%. So 98% equals 5,096. 2% then equals 104 Rand. And there's all your calculations that you need in order to do your journal entry. So let's go and do the journal entry. Remember the first transaction, the invoice price was 34,200 Rand. So we would credit our creditors with a full invoice value of 34,200. What is the VAT going to be? 34,200 divided by 1.14 multiplied by 14% equals 4,200. What was the VAT exclusive amount? 30,000. If I broken down, 98% would have gone to indirect materials, 29,400. So debit indirect materials, 29,400. 2% of the VAT exclusive amount, there it is, would have gone to our allowance for settlement discount, 600 Rand. So allowance for settlement discount debit, 600 Rand. Then we received the credit note. The credit note was for 5928. If we take the 5928 divided by 1.14 gives us 5,200 Rand. 5928 less 5,200 gives us our VAT of 728. So VAT control, credit 728. Then if we take our VAT exclusive amount, 5,200 times 98%, that gives us 5,096. So 5,096 would have been posted against our indirect material. Please don't forget about your statement indications. You would have lost a lot of marks if you did. And then the 2% would have been posted against our allowance for settlement discount, 104 Rand, allowance for settlement discount, 104 Rand. Now payment took place. They told us we paid him 27,707. So we credited bank 27,707. We have to clean out the creditor's account balance, which equals 34,200 less 5,928, which gives us a total of 28,272. We have to clean out our allowance for settlement discount. So allowance for settlement discount being 600 Rand less 104 Rand, which gives us 496 Rand. And then we must pay over the VAT on the discount that we've received. So 496 times 14% gives us 69 Rand, and we would have credited VAT with 69 Rand. Now, if we add the 496, the 69, and the 27,707, you will see that you balance to 28,272. And that is the first part of the question. Good. The second part of the question wants cost of sales, and the last part wants our disclosure of inventory. So let's open up all our accounts. Raw material, work in progress, and finished goods. Opening balance, 20,000 Rand. Raw materials, opening balance, 20,000 Rand. Work in progress, opening balance 5,000 Rand. There it is, work in progress, opening balance 5,000 Rand. Finished goods, opening balance 55,000 Rand. Finished goods, opening balance 55,000 Rand. That includes our unrealized profit of 5,000 Rand, 10%. So allowance for unrealized profit, opening balance there, 5,000 Rand, 10 divided by 110 of the 55,000 Rand. Good. Then we have purchased raw materials, and there's the amount, 113,500. So raw materials purchases, 113,500. There was also transport costs on the purchases of raw materials. So here transport costs, raw materials, 75,000 Rand, and there it is, 75,000 Rand. They gave us here in number, I think 3 it was, raw material which was kept in the warehouse was destroyed in a fire during the year. A total of 10,000 kg raw materials bought at 6.84 Rand per kilo, inclusive of VAT. So if I'm going to take out the VAT, 6.84 divided by 1.14 gives me a total of 6 Rand per kg. So 6 Rand per kg multiplied by, oops, that one I don't want to be colored in, multiplied by 10,000 gives us a loss of 60,000 Rand. So closing inventory raw materials still includes this amount. The loss was covered by insurance policy of 57,000 Rand inclusive of VAT, which was received from the insurer. No adjustment entries have been passed to rectify the accounting records. So when they gave us the closing balance of 75,000 Rand, they say that that still includes the loss. What was the loss? The loss was equal to the 10,000 kgs times 6 Rand equals 60,000 Rand. So let's go and record the loss first. There's the loss, 60,000 Rand, and the debit side would have gone against a loss on raw materials, 60,000 Rand, which would have been recorded as a normal operating expense. Now, they have recovered 57,000 inclusive of VAT. If you take out the VAT is 50,000, so bank would have been debited with 57,000. The loss account would have been credited with 50,000, so the actual loss would only have been 10,000 Rand. But again, a normal operating expense, and that is not required from you to show normal operating expenses. So what is important is that you've recorded the 60,000 Rand loss in the raw material account and that you've adjusted the closing balance to 15,000 opposed to the 75,000 that's lying there. Now, if you're going to balance off your raw material account, you will see that the balancing figure is my amount of raw material issued into the production process, which is going to be posted against work in progress, which is 133,500. So in my work in progress account on the debit side, there's my raw material, 133,500. Great. Work in progress had an opening balance of 5,000. It had a closing balance of 7,500. So there's my closing balance of 7,500. There's a number of overhead entries that we still have to account for. Admin expenses, normal operating costs, it doesn't appear anything in cost of manufacturing. Direct labor costs, 375,060, that would have been posted against my work in progress account, direct labor, 375,060. Remember, it's not subject to VAT. Then overheads, and they've told us it's all taxable supplies, it means all subject to VAT, so there's the amount we've worked out, 190,000. And here it is, overhead cost, 190,000. Selling expenses, that's a normal expense, operating expense. Transport costs we've already dealt with. So if we go back to our work in progress accounts, we can now actually, don't forget about our indirect materials. Indirect materials we still have to account for. Now that can either be the 29,400 less the 5,096, and that gives us then a total of 24,304, 29,400 less 5,096. Or if you didn't manage to get the journal entry right, you could have argued this whole thing out. You could have said, well, we've paid 27,702, that equals 98% of the amount owed, which gives us 28,272. 28,272 includes VAT, so if we take out the VAT, it gives us an amount of 24,800, but remember that we've only posted 98% of the VAT exclusive amount to our indirect materials account, and 98% of the 24,800 equals 24,304, which brings you back to that amount of 24,304. Now we can actually balance off our work in progress account, and our balancing figure is the cost of goods completed for the period 720,364. So we credit work in progress and we're going to debit our finished goods account 720,364. We add a 10% unrealized profit to the cost of goods manufactured when we actually transferred that from the production area to the sales area. So let's do that entry. 10% of 72,0364 equals 72,036. Against what account do we actually balance post it? Against the unrealized profit P and L account. Now the unrealized profit P and L account is another name for that is the manufacturing profit account. So here's our unrealized profit P and L account, or the manufacturing cost account, profit account. So there's our credit side of the entry 72,036. Good. They gave us also the closing balance of our finished goods. There it is, 66,000. And now we can balance our finished goods account off, and the balancing figure will be the cost of sales. But remember, everything in the finished goods account is at a blown up price. So that 78,400 is not the actual cost of sales, that is the cost of sales inclusive of our unrealized profit component. So our cost of sales, the one component, the big, it is in fact 90% of the total cost figure, 78,400, but during the year there was actually unrealized profit included. Now in our allowance for unrealized profit, we said that our closing balance of our finished goods account is 66,000. Now if we were going to work out the unrealized profit component, it's multiplied by 10 divided by 110, and that means that we want the closing balance of our allowance for unrealized profit to be equal to just put in profit, to be equal to 10 divided by 110 multiplied by 66,000, which is 6,000 rand. So how do I get a 5,000 to 6,000? By passing a credit entry of 1,000 rand. So I will credit the allowance for unrealized profit with 1,000 rand, and I'm going to debit my unrealized profit P&L account with 1,000 rand. Now I can finish off my unrealized P&L account. I just want you to remember here, guys, that we're going to bring down our balance here. Balance brought down. Let's just do that because it can be quite confusing if you're not 100% with me. All right. There you are. Our unrealized P&L account, if we balance that off, the balancing figure needs to be posted to cost of sales because that was the unrealized profit included in the goods sold during the year. Cost of sales in that entry would have been debited. That's debit entry would have gone against cost of sales 781,400, and in this entry there's the debit, so that 71,036 would have gone to the credit side of the cost of sales account. So cost of sales will then be equal to the net amount of 710,364, and that is the B part of the question. B part of the question asks you calculate the cost of sales figure, and there it is, the cost of sales figure 710,364. The last part of the question is the disclosure of our inventory. Good. So let's have a look at our disclosure. Firstly, Kopkrap Manufacturers Limited Statement of Financial Position as of 31 December 2015. Note 2015 Rand. Assets, current assets, inventory, a reference to a note number, and then the total of my total inventory figure. Then extract from the notes to the financial statements for the year ended 31 December 2015. Accounting policy. Inventory. Inventories are measured at a lower of cost or net realizable value using the first in, first out method of inventory valuation. Net realizable value is equal to the expected sales proceeds less any compulsory selling costs that have to be incurred to make the sales transaction happen. 2015 Rand. Inventories. Inventories consist out of raw materials. Go to your raw material account. There is a closing balance of 15,000 Rand. A work in progress. Closing balance. There it is, 7,500. Finished goods, 60,000. Now guys, that 60,000 consists out of our finished goods of 60,000 less allowance for unrealized profit of 6,000. So clearly there, the net impact equals 60,000. Now here I've shown you the 66 and the 6. But in real life and in a good question or in your question where you're going to answer that, you will not show that. You will only show finished goods at 60,000 Rand, no breakdown. The user of the financial statements is not interested in any unrealized profits or internal transactions. He wants to see the actual picture. And then consumables, which I gave you in your question, closing inventory, 1850, packaging materials 1850. In total 84,350, 84,350. And that's the whole story.